What's up, guys? It's Michael here. So, based on a report that is currently given in the previous month of June 2023, inflation now is starting to decrease. So, if you look at the month of before they released the report, which was May, it was around 5.2 to 5.3%. And now, coming up in June, when the report was released on June 30th, the report shows it around 4.7 to 4.8%. So, it's on average around 0.5% decrease. Now, the real question is whether or not are they going to raise interest rates. Based on the data given and based on the report released by Jerome Powell, we know by the end of 2023 they're going to raise interest rates two more times. So they won't raise it every time, but it depends when they're going to raise it. So the data shows that it's really promising that right now they're going on the right track. Currently, the economy, inflation is going back down, and everything that needs to be done has been set in place. Now, people are wondering, is this current month of July, are they going to pause interest rates or they're going to continue raising? Only time will tell. But first, a key indicator is a lot of people think they're finally going to pause interest rates, which could be a possibility. Most likely it will. Some maybe it will not. But we know that only two more times they're going to raise it just to keep it under control. Because you think about it, Jerome Powell, he's the head of the United States when it comes to finances because he runs all the data and he runs everything behind the scenes, so he knows what is going up. Like, everyone, including myself, could criticize him, but he has all the data. He has all the things, he knows how the economy is running. He's the one basically, honestly, saying he has more power than the president himself because he knows how the economic system works. So we look at it as eggs dropped over 5%. They finally started decreasing prices. A lot of people use eggs as a commodity, use that as the benchmark for food inflation. But personally, you got to look at all other types of products too. First, you look at wage inflation, meaning if wages go up, that means a lot of people will start buying more things. Unfortunately, that is the case. So a lot of people think wages are going to go up, and at the same time, if wages go up, they're going to need to curb wage inflation. I mean, if wages go up too fast and products go down too fast, that means a lot of people are going to buy up the products and prices got to raise again. And of course, there are other scenarios saying that what happens if people don't buy out the products. But if you put it that way, how many people actually follow that rule? Very few. So if you look at core PCE inflation, basically it takes off food and energy prices because energy prices, they say they're going down, but at the same time, it really depends where you live. For example, Texas versus California, their prices vary and their taxes vary. Meaning is the way their inflation works varies between state to state. If you look at houses said, a lot of people say, oh no, houses are finally going to be like plummeting in prices. That basically varies. That's actually part of the inflation too. Like houses in California versus in Florida or New York, completely different places, complete different demographic. The way their prices drop could be a reflection if you look at back at 2008. So the main question is, are they going to raise interest rates or are they going to not? Personally, I know it's going to be two more times because that's what Jerome Powell said. Whether or not how the market reacts, personally, I think they're going on the right track. Even, honestly, they could do better, but hey, if they pause interest rates, people in the market will expect what is going on. This is what they're going to do, whether income goes up and down. Maybe they think fine, the recession is over, which could be a possibility, which is really unlikely because even the overall inflation rate, the core inflation, drop around 0.5%, they still got to make up nearly 3%, looking around 2.7 to 2.8% to hit their target goal, which they predict they're going to hit the target goal around 2025. So now we're in the middle of 2023, we're almost end of 2023, so I guess by the end of 2023, they're probably going to raise interest rates two more times, and by that time, they're finally going to start decreasing it. That is their plan. Now, looking how the progress is growing is currently going almost according to plan, but kind of not really there. For example, it's like, yay, look, food commodities, eggs going down, electricity partially going down, but at the same time is going up in certain places. Used car prices, homes, etc. going down, but it's still not pre-pandemic level. Now, if you look at inflation in other categories, let's look at besides housing, you look like at food, other types of food besides eggs. You look like at restaurants. Restaurants will be the biggest impact. If you're going out to buy food, buy groceries, and you go out and eat in restaurants, have that really decrease in price? The answer is no. If you think about food before 2020, it was still pretty expensive back then, but it's not as expensive right now. Right now, it's still way more expensive compared to like pre-COVID of 2019. And if you look at 2013 or even further back, that's even cheaper. Gas prices, Personally, it could be a lot cheaper, but I think this is at this point a political issue and at the same time environmental issue, meaning you have the environmentalists and a bunch of other different political parties making gas very expensive when it can be really cheap. Same goes for electricity. As I mentioned many times in the video, if you want to make products a lot cheaper, all they have to do is increase productivity. And besides all the incentives they're giving out, they can give incentives to build more companies and businesses for that specific category they're trying to increase. And if you look at that way, you look at commodities like schooling, food, housing, just build more of it and build high quality products and build it in home, meaning built in the United States instead of shipping out, because during COVID it proves that the supply chain itself is really fragile. When you have a disruption, it becomes a major disruption. And you look at used car prices, currently it's dropping. It is dropping, but it's still not pre-pandemic level. Now, how the economy is going to go up and down currently, I believe it's doing its thing right now. Inflation, it's still going down, but it's not hitting every single category. For example, wages, they want, like the government made it brutally honest. They want people's wages to go down, meaning people don't make as much money, so they don't spend as much. If they don't spend as much, they'll force businesses to close down. And business close down, a lot of people lose their jobs. And when a lot of people lose their job, they have to reduce prices. That's their way of doing it, which personally I do not agree with, but it is how it is. So coming up for the next couple of months, just keep in mind the interest rates are either going to pause or going to go up. After going down, there's almost no chance of that happening. That's it for this video. I hope you guys enjoy. Please click the subscribe button down below and have a good day.